Have you been thinking about getting into Forex trading? Forex trading opens up a world of opportunity for those who know how to do it properly. You can experience financial freedom and reap tremendous rewards for your trading skills. Unfortunately, many programs make big promises and throw students into the trading market without the proper knowledge and expertise to succeed. Fortunately, there is a solution. Great White FX Academy is the best place to start your Forex trading journey with the tools, resources, and education necessary to help you thrive in the market. Great White FX is an online Forex training platform that provides technical training that will help you succeed. It is of the utmost importance to have a proper qualitative education to participate in Forex trading, and that is exactly what Great White FX focuses on. You can reach us on Facebook at Great White FX and Forex Educational Academy, on Instagram at Great White FX, on Twitter at Great White FX, or call us at 234-803-930-61888.
Good morning, all. Good morning, all. Morning. If you can hear me clearly and see my screen, just please type yes into the chat box. Good morning, all. Welcome. If you can hear me clearly and see my screen, please type yes into the chat box so that we can start. So, good morning, all. You're welcome to today's class. Today's class with Great White FX. Welcome you all. Today we're going to be looking at order blocks and their applications in your trading. No, not order blocks, sorry. We're going to be looking at order flow and liquidity. That's what we'll be looking at this morning. The student was saying she doesn't understand what it is and how it's being used in the market. So I'll be doing a brief recap of what order flow is and how it is applied in the market. So, because if you're trading and you don't understand how trading basically is done, you're going to have a lot of problems. You're going to have a lot of problems because you need to understand the mechanism behind the price movement before you can better understand it. It's not your fancy indicator. Your fancy indicator only moves after price has moved. The only thing that can tell you what would happen before it happens is a sound understanding of the market structure and how it works. So you first need to understand market structure. That I'm not going to teach today. What I'm going to be teaching today is order flow. So without wasting too much of the time, let's get into business. So I'm going to do a little bit. I'm not going to use a chart first. I'm going to use a whiteboard. So I'm going to use a whiteboard. Can you guys see my whiteboard? Hello? Okay. So the market, the Forex market, runs on the liquidity. That is the main stuff that runs the market. And this liquidity is not retail traders' liquidity. This liquidity is the liquidity of the larger traders in the market, not retail traders. That's the larger traders in the market. Those that trade for institutional houses, very large banks, and the rest. That is where they need the liquidity. And the fact that those people, they are big players, you're looking at them handling very, very large amounts of money. Very, very, very large amounts of money. And when I mean large amounts of money, you're looking at somebody handling close to the tune of almost 20 to or more to 200 million USD. 20 to 200 million USD. So you can compare this with your under $100,000 account. So you can compare this. So people with this sort of money, they can't go into trades the way you and I go. They just can't click buy and sell and they will immediately get into the market. It will create slippage. It's going to create slippage for them. One, it will create slippage. Two, to leave evidence in the sense that everybody will know when they come into the market, and they do not want that, because when people find out when they come into the market, it's going to create people will try to get in ahead of them.
Can you come again, please?
There will be a recording. I can't repeat myself. I don't want this to be too long. So
okay,
they would create slippage and it would leave evidence. So they don't need any of this. So what do? They need to find liquidity. So what is the purpose of liquidity? They need the liquidity of less informed traders to go into their opposing positions. So what do I mean? If they intend to go long, they need sellers. If they intend to go short, they need buyers. So this is how they create the liquidity they need to move the market. So if they intend to go short, that is, if they intend to go short, they need to find buyers. If they intend to go long, they need to find sellers. So how do they do it? The buyers create liquidity as the longs here. Those that are long. Longs are also the same thing as buyers, and shorts are also the same thing as sellers. So these creating sellers gives liquidity for longs. How do I mean? Now let me get something to draw with this. Let's assume price is moving up. Let's say we have horizontal line here. Everybody sees this line. Everybody sees that this is support level. This is support level. Then price, excuse me. Right. Okay. They intend to, let's say there's a resistance level here. And they intend to go, remember what I said, if they want to go short, they need buyers. If they want to go short, they need buyers. So, and how do they do that? That's where you have the other, what I said about in the beginning. This is where liquidity comes in. And what is liquidity? Liquidity, let me write that down before I go into the example. Liquidity Liquidity is a pool of triggered pending orders and limit orders. So for them to, they need to engineer, they need to get liquidity. And for them to get the liquidity, most times they need to engineer it. Because since they cannot just instantly buy and sell, they need to find buyers in the market to sell to, and they need to find sellers in the market to buy from. I will repeat that again. Just like what I said, if they intend to go long, they need to find sellers. And if they intend to go short, they need to find buyers. So now, what are these liquidity pools? Now, let's give a very, very plain example. Assuming this is a market price, and price is doing something like this. Those that are selling, their stop loss is going to be above here. This is where they are going to have their stop loss. Anybody selling from this point is going to have his stop loss here. Cleaned everything up, sorry. That was not my intention. Let's say you have something like this. Price has made a new high and it comes down. Anybody who decides to sell here, let's say somebody is selling here. Sellers, you have sellers here. You're going to have, the sellers are going to have their stops above here. And since this high is higher than this high, you're going to have people, breakout traders, who would say, oh, you're going to have breakout traders who would say, if price goes above this level, I want to be a buyer. So you're going to have, at that level also, you're going to have buy limit. You're going to have buy limit at above this other high. So you have the stop loss of the seller, and you're going to have buy limit of breakout traders. So now this is what you classify as your liquidity pool. This is what you will call sell side liquidity pool. This is sell side liquidity pool. So this is liquidity for shorts. So if they want to go long, long side liquidity is going to be here. The sellers here, the buyers here, because they intend to go short. The buyers here, as those that have been buying. I would explain that so that buy stop, sorry. You're going to have let me erase this. We're going to have buy stops. Just the same thing as a limit order, is a limit order. But for easy understanding, you're going to have buy stops. So you're going to have buy stops at that level. So that creates the liquidity pool. So in this situation, you have this liquidity above here. And if they have the intentions of going short, what are they going to do? It's very simple. You already have people who are, okay, people who are already saying that I'm going to sell, this thing is going down. Then you have another group of people who say this thing has made a higher high. If that means that it's going to go up, they're going to place their buy stops here. So most times, what do they normally do? Most times, what do they normally do? They come in here, they trigger everybody, and what happens? They move in the opposite direction. What happens here? Those that are selling, their stop loss orders, because when you're selling, for you to take profit, you turn to a buyer. Your order is changed to become a buyer. Then those that are putting buy stops here, once the order is triggered, it floods the market with lots of buy orders. That's orders to go long. This stop loss to triggered means orders to go long. So what do the institutions do? They sell into those orders. So there's a big liquidity of long, there's a large pool of long liquidity here. So since, because most times they can create the liquidity themselves, they engineer it. They just create very, very massive candles. Everybody believes, it's still going up, triggers everybody, and then moves in the opposite direction. So once that is done, they've activated, they've sold into those large, long orders. So because the stop loss of those that sold and the pending orders of breakout traders have all been activated, and then price moves in the opposite direction because the institutions will then sell into that liquidity. Now, let's assume price is coming down to a support structure. We have the support structure here. Price does this, does this, does this, and makes a new low. People will say this. You see people like, it's made a new low, it's going down. It's made a new low, it's going down. Let's say price comes down here and does something like this. People are going to be buying here. You're going to have people that will be buying. Wait, let me use a more practical example. Let me use a more practical example that we normally see in the market. Price comes like this, does something like this, comes down here and starts to go up. People are going to be buying here. That's made a new high. Then there are people that are saying that if it breaks this level, they are going to go short. Those that bought here, their stop loss is down here. So let me put this here. Let's sell all buyers. Then also at that level, you're going to have limits of sellers. As these pending orders, these are limits, pending orders of those that have positions below here. Those that are saying that, if price goes below here, it's going to keep going lower. So now what happens? People bought, price starts coming down. What does price do when it starts coming down? It comes down, clears everybody, and then moves in the opposite direction. Or if you're buying, your stop loss here is a sell order. If you have a pending order here, a sell stop, that sell stop is a buy order. If you are selling, like if you're buying, your stop loss here, because you're buying, if you're buying, for you to take profit, you have to turn to a seller. So your stop loss here is a sell order. Are we on the same page? Then those that are selling, those that have sell stops here, their sell stop order, when it becomes activated, is a large, you understand, it's also a sell order. Stop loss of buyers, another sell liquidity pool. These of the sell pending orders of those that intend breakout traders, they all create long side liquidity pool here because they create a large quantity of selling orders here. And so once that happens, what does the institutions do? When they come in here, they buy into all these orders. They buy into all these orders because all these orders here is long side liquidity. Because they create long side liquidity. Up here, they create sell side liquidity. The long side liquidity here is from the selling of the triggered sell stops and stop losses of those that are buying. At this level here, the sell side liquidity is the buy pressure or buy liquidity that has been created above this from the stop loss of the initial sellers and buy stops. So once that is triggered, price moves in the opposite direction. So in other words, if they intend to go long, they need sellers. If they intend to go short, they need buyers. Do we have questions before I move on to the next level? It will be a bit confusing. At first, it will be a bit confusing, but you need to watch it over and over again to get it. Can we all still hear me clearly? Can we all still hear me? Hello?
Yes, sir. Yes, sir. Go ahead, sir.
Okay. Okay. So since I don't have any questions, let me move ahead. So you now get it. Now the next question is, where do you find, because to trade, to use this system, you need to ask yourself one question. Where is the liquidity? So now the other question is, where are the retail, or instead of using retail, let me just use where are the, or where can you find liquidity on the charts? First, you have above swing height, below swing lows, above range tops, below range lows. And the time frames, monthly, weekly, and daily highs and lows. So these are where you can find such liquidity. And we are on the same page before I move on to, because once I leave here, I'm going to move over to the charts. Any question? So you need to think like an institutional trader. If you need to find liquidity, where would you find it? So once you understand where the liquidity is, you would not fall victim to the liquidity hunt. Because once you understand that they can find liquidity at daily highs and lows, most often the daily highs and lows are either the previous or a prior month's high, a prior month's low, a previous week's high, a previous week's low, or a previous day's high or a previous day's low. Those are where you're going to find such liquidity pools. So you need to be aware of that. So with this now, I'm going to move away from this. Let me go back to my chart. Can we all see my chart? Can we all see the chart now? So now I'm going to show some examples. I'm going to use this last week because there were some pairs I was trailing this last week. One of them was the GBP CHF. Because somebody might say, what I'm teaching, does it work? Yes, it works. So now let's look at, this is the candle that closed on Friday. This is the upper week's candle. As you can see, we're on the weekly time frame. So I put this here. Let me carry that something. If you have background noise, please mute your mic so that I don't have to remove you from the class. You have background noise, please keep your mic on the mute so that I do not have to remove you from the class. So I already have all this marked out. So you're going to have prior week's high. This is it. And if you look at, now let's go to, let me put something here so that it is easy for us to see this on in smaller time frame charts when we go in. So where we're going to look at, let me go to the 1 hour because most people trade off 1 hour. And if I go to this 1 hour, let me put the periodic separators. Where is it? Session breaks. So one more thing, sorry, one more thing. Let me put the horizontal line here. Okay. Just a little. Okay. So, yep. So now let's go to the daily time. So now this is Friday. This is Thursday. This is Wednesday. This is Tuesday. This is Monday. You get? This is Monday. I think I was to put this line on the new week, so the beginning of this new week, so that it's easy to see on the one. So this is where it starts from. So this 5, 4, 3, 2, 1. So if you notice what the price do when price came, you know this is that weekly. This is where the breakout happened. So let me even remove this. I might not physically need this. So do you see what price did? Price spiked above it, then dropped. Spiked into it again, because sometimes the way you trade this, it requires a bit of wisdom and skill set. So sometimes what you can do is you drop to your 30 minutes time frame, but it can be very dangerous depending on the pair you're looking at. And if you notice, it spiked above and then dropped, came back the second time, spiked above it, went sideways. Then on Tuesday, because this is Tuesday, do you see this drop? Sometimes the first drop is always pays better. Sometimes the second drop. So if you look at this, drop from this point to this point, that was 119 pips on this pair. So now let me look for another pair. Which other pair did this happen on? AUD USD. No, NZD USD. I remember it happened also on NZD USD. So this is NZD USD week. This was a very, very mean pair this week. But it gave money both ways. It gave money both ways. Because most of you are not swing traders. Most of you are not swing traders. So this would help you get a lot of things sorted out prior week low. So we pick up this, we put it on this candle, lock it in, and we go down to the lower time frame chart. Let's start with the 1 hour. So if you notice, this is 5, 4, 3, 2, 1. On Monday, when this pair first came out, do you see the break? It broke below the low. I can't teach you all instances of how it plays out. That is your job to find out, because they don't make it very easy. That's what you need to understand. They don't make it very easy. They make it pretty difficult. Sometimes it's very easy to find, sometimes it's not. Because I remember one of my students, she saw one, yes, on euro, yen, yes. She was asking me about it, but I didn't know that the GBP news had been shifted forward. So I was still thinking that the GBP news was around 12. So I told her to be cautious. I'll show that example now. So you see what they did? They dropped below it, came down, as if they were breaking away. As if they were breaking away, then what did they do? They pulled back into the chart. And that move, this move was what, how many pips? They dropped, tested it here. Maybe you'd have placed your buy somewhere here. Or even if you bought here, so this up point here is 56 pips. Because one, when you're trading this, you must understand structure. You must understand price action very well. If you don't understand price action, you're going to have a lot of problems trying to understand this. So that alone, before they, what did they now finally do? They finally broke into the downside. After that high, then price was finally broken to the downside. It now closed the week below last week's low. Then think another pair, that's the euro yen. Let me go to the euro yen. I remember there's so many other pairs I know this happened. Many other pairs. But these are the ones, these are pairs that I trade basically. So I'm able to remember them. So now let's go to the euro yen. Euro yen. This is prior week's high. Prior week high. I didn't touch the low, but just for the sake of teaching, let's put it prior week's low. So we're going to mark out when this week started as here. Then I'm going to use the 1 hour chart because it was on the 1 hour she pointed it out. So do you see this? Sometimes it's going to be a little bit dicey. Do you see what they did here? They broke and did a very, this would have given everybody hope that it's still moving higher. But I think there might be something to the left. Let me check on this chart. There might be something to the left. Let me hide everything so I can see what they pick, which high they came to. They probably came to pick a high. Okay, they ran into structure here. They ran into structure here because that's why I said you need to understand structure to use this effectively. If not, sometimes you will get trapped and it would not be a good idea. There's structure here. That was where price ran into. This candle here. Let me see if it is clearer on the daily time frame. Let's see if it's clearer on the daily time frame. Yes, this swing high here. There's a swing high here. That was where price ran into. So if you had marked out your levels on your chart, let me put this back. If you marked out your swing highs, that's why you must always know where your swing highs are on your chart so that you avoid being a victim of the stop run. Because the liquidity is gotten also via stop run. previous week's high. No, comment. Let me look at this screen. I'm not seeing this screen. I want to pick this high. That's at 125.59. Well, I don't know what they saw here, but very evident there was something here that they saw that made price drop at that level. Let me look at it properly. Yes. Why would I see this chart? You do top-down analysis. You start from the monthly down to your daily. So that's how I do my analysis. If you switch to your line chart, I have something here and here. Because I use my line chart also when I'm marking up my levels. So that's why I say there's a lot of experience required in this business. If you don't have it, I would advise you get the experience, because what I'm giving you is knowledge. You need the experience to be able to see all types of scenarios that will be available to you in the market. So, I didn't basically touch that. I would have had this swing here, marked it because there's a swing there. So I would have had 3 levels at this point. And it came very close. Didn't basically touch any of them, came very close and then dropped. So now you go down to your 1 hour time frame. You go down to your 1 hour time frame. This was where, I think this was where my student was asking me about that. He was asking me about that. And I was like, the news might still come out. Because this was the previous weeks. Yes, it was here. You see, they broke above, did as if they were going back and dropped below. And when you observe them dropping below, they ran back up to test that level. At no time did they close fully above it. And what happened? They dropped. So how would you have taken this trick now? You drop to your lower time. First, you must have an idea of what they intend to do. If you don't have an idea of what they intend to do, and you use this system, it might not go well. It's always at the first touch. It's always at the first touch. It's easier at the first touch. So do you see the pullback? It broke below, pulled back, and this was a bearish candle. If you want to, you can also drop down to a 15-minute time frame. Because on the 15-minute time frame, this is where you would have gotten your entry. Here. But if you were on the 30-minute time frame, excuse me, this is where you would have gotten your entry. Somewhere here. So do you see the difference? And the difference between those two levels is, let me see, that's like 10 pips. That's something to a lot of people. So price runs into there, gets rejected. And from this point to the low it made here was how many pips moved? That was 50. So if you just took only these 3 trades, that's the Euro Yen, the New Zealand, and the GBP CHF, that would have given you close to almost 150 pips plus this week alone. But then there was something. Let me now show you an example of this setup on an intraday move. I noticed somebody gave a signal on the Euro USD, Euro AUD. Now to show you, I use the weekly now. Let me use an intraday because I was watching the example. I think gold did something like that. Yes, gold did something like that this week. Let me go to gold. Gold's own is that gold used it for a continuation pattern. Gold used it for a continuation pattern. 1, 2, 3, 4, 5. No, it wasn't this week. It was a prior week. It was a prior week. Let me see if I can show it to you people here. It's on this candle. This was this day's low. As you can see, we're on the daily time frame. Do you see what price did? Price tripped the low. Let's go to a lower time frame. Do you see? Price tripped the low, immediately tripped the low. It continued higher. So that is liquidity being picked up here. Sometimes the liquidity can be used to reverse the trend, and it can be used as a continuation of the trend. In this case, the liquidity, what they did here was to displace those that started buying here. They will put their stop below this low. So what did they do? They displaced the initial buyers and took their position and took price higher. So that is one setup. Then let me go to the Euro AUD that I wanted to talk about. So if you look at this Euro AUD, where's the daily? Okay. If you look at the Euro AUD, this is Thursday's low. This red bearish candle here is Thursday's low. And there was a telltale signal. If you are very observant, that's why you need to watch your daily lows. If you were very observant, you'd have noticed something on Wednesday. Price went below Wednesday's low, but didn't close back below it. It closed back inside the body of Wednesday. That was a clear warning that Thursday might not go lower. So what did they now do? So let's go to our 1 hour time frame. Do you see what happened here? Price dropped below the first time, went back up, dropped below the second time, and what did they do? They started moving back up. Some people would have seen this red candle because this bearish candle here, this bearish candle was. Can somebody mute their mic, please? Somebody's mic is on. Can you take care of your mic? This candle was bearish below this level here. So somebody who is impatient would have sold here. And when you sell, what will happen? They take price away. And most people, everybody did it. Experience will teach you. As price starts coming back down, what will you do? You will say, let me sell so that by the time price gets to my initial entry, I'm going to be in profit. And you will sell again. You already have one sell here that is underwater, and you're taking another sell here. As it starts moving, you'll be like, okay, it's moving. Then the next thing, it spikes here. Before you even know what is happening, they turn the other way and take off. Now you have two trades that are heavily underwater. Some people that are smart will put their stops here. Those that are not smart will keep moving their stops. And eventually, by how many pips did this move away? Let's see. From this point to this high, that's 85 pips. So it's a very simple system. Where did they run up to? This previous lows here. It's a very simple system, but you need to understand structure to be able to use it properly. If you don't understand market structure, you won't be able to use the order flow properly. And like you see in this case, it is easier here. You see, it's very, very obvious what their intention was. But if you look at the euro yen, where's that level? If you look at the euro yen, where they did it on the euro yen, let me put that back. On the euro yen, it wasn't so obvious. As you can see, they gave a break, several retests above this weekly high. They kept bouncing above it. That bounce was how many pips? So sometimes they don't make it easy. Sometimes it is easy. This was 32 pips before they finally started dropping. And if you notice again, when did they start dropping? This is a previous day's high. Immediately they triggered it and closed back below. It was lights out. As you can see, sometimes it's very easy, sometimes it's not easy. So this is how you use it. So when you first see it, you need to wait for a retest. If price goes above the level and comes back below the weekly high, like in this case, it's a weekly high, it went above it and came back below. Most times they will retest the level. As you can see, they tested it severally before dropping off this 15-minute time frame. Maybe you could use 1 hour. They tested it before dropping off severally. Before dropping off. Sometimes, like in the Euro AUD that we looked at, they might not test it that deep. Because see, they didn't go that much. First, second, and then they took off. Sometimes it's easy to easily spot, sometimes it's not. Let's look at the GBP-CHF. Let's see how easy that was. The same thing too, the same setup like on the Euro yen. Almost the same setup, but it dropped off heavily the following day. So these are things you need to be aware of on your chart. So these are how you trade the order flow. So how do you backtest this? Somebody may say, how do you backtest this? It's very simple. There's a backtesting software I use. It's called Soft4FX. This is it. It's called Soft4FX. And it plugs easily into your MT4. It plugs easily. Those of you who know how to install a harmonic scanner, who use harmonic scanner, is the same process. And this costs under $100. You can get it from soft4fx.com. Soft4fx, that's soft4fx.com. If you need to get it, because they use verified paper, you could reach across to me. I could also help you get it. But how does this work, sir? Let's look at this. It has the simulation date starts from May 20, let's say May 2009 to 2020. So you could imagine the length of simulation period for you. So let's say I want to do 2020. I start from January and I start from March. This is my currency. This is my starting balance. You can start with any amount. You could choose when you want to end the simulation. Then this allows you, if you select this, that means you can rewind. What does rewind mean? That means you can move the chart forward and move it backward. But that's just for teaching purposes, let's leave it. Then initial history on charts. I always advise you leave something like, they said the maximum is 100,000. You can leave something like 5,000 so that you have charts, more charts to your left-hand side. So once you've done that, you click on Start Simulation. When you click on Start Simulation, something is going to pop up. This is going to pop up. So when this pops up, you could go to charts. When you go to chart, period, you could test, you have tick chart, you have Renko, you have range chart, and then you have standard chart. Then you could say, okay, you want to use daily. You click add. You give it some time. It goes up there. You go to 4 hour, you click add. It goes up in there. And you go to 1 hour, you click add. Because unlike your normal MT4 where you can move from one time frame to the other, when you're using this, you cannot step between time frames. Once you're on 30 minutes, you're on 30 minutes. Once you're on 1 hour, you're on 1 hour. So once you've done that, you click open. Just give it time. Chart opens, click open. Chart, click open, click open. So once you're done, you click close. And you make your chart big. You go to Windows. you tile it how you want it to look like. So this is how I want mine to look like. So once you're done with that, you would need to now add what you want to test. Some of you have the indicator. I gave it to some of you. Templates. Let me see if I can find the template. Okay. Let me just put a plain template so that I can easily set it up. Let me remove the indicators list. Let me remove everything. All right. So let me save template, save this template as plain. It works the same way, it works the same way with your MT4, so there is nothing to change on it. Yes. Then I move over to other time frames. I put that same plain template. Plain. So you have all these on your charts now. So assuming you want to now test that weekly highs and daily lows, you come to this time frame, put your indicator list, go to custom. Some of you already gave it to you. You already have it. So this is the indicator. When you pick the indicator, this silver line, I always change it to pink. The middle line, red. Topmost one, I leave as green. Then the width, I normally make the width a little bit thicker. And once you're through, you click OK. Go into I don't know why it's not showing here. You could also use it with the zigzag. Trying to find the template. I don't know why it's not showing. I don't know why it's not showing today. I'm going to find it. Let me find out why it's not showing.
Maybe you need to darken the background for it to show. Possibly.
No, it's not. I don't know why it's not showing today. I don't know why it's not showing today. This is something I use to work. I use it to work. I use it to work. I run tests with it. I don't know why it's not showing. I don't know why. But let me put the other one. There's the intraday. There's intraday daily high, daily low. Let me see. I don't know why it's not showing. Maybe it's kind of fault today. So this is showing. Let me remove. Let me go to indicator list and remove the support and resistance too. So as you can see, this one is showing. So you could use this to run your test. But I have no idea why this other one is not showing. I have no idea.
I think you need to click on visualization.
Is it?
Click on visualization and
Okay.
add maybe a box or something. I think it's
Okay, let me check. It's an all time frames.
How about the command? Allow the other inputs. It should show now.
I don't know why. I run tests with this, so I'm surprised it's not showing. I don't know why. Maybe because I'm using large data. I'm coming. Let me do something. Let me try something because I've not used it in 2000. You get? I've not used it in 2000. So let me just be brief in this. I've never used it in 2000. think I've used it in 2013, January. Sorry. Wow. So once you choose the coupon. Let me see, it's supposed to go through. Let me see why it will not work. Wow, still not sure. I'm surprised. It normally shows. If not, I wouldn't tell you people it works. It's something I use to test out my charts. Wow. I don't know why it's not showing. I do not know why it's not showing. Maybe I have to reinstall it. Maybe there's a problem with the store, so I have to remove it and put it back. So this is where you test it. It actually does work. I use it. That's how I got to get enough confidence in the system.
I did take early now.
So you could use it. So this is where you come to test it. And the good thing about this software is that it has, you could put the history on chart. It has the sessions. So while you're trading, let me see. Let me use it 1 hour. So how do you use it if you wish to test? So on this 1 hour, let me put one that is working. Maybe I am do. Let me put one that is working. This one is not working and I do not know why. Maybe I'll have to get the application again. So let's look at this. You put your periodic separators. Click OK. So you want to test it. You start here, you go to the time frame you want to use. If you leave it on daily, once you click, it's going to move forward by 1 day. Then you come to this 3 dotted area. You click pause the simulation automatically on TP or stop loss. Somebody says, and put separators. Okay, I might try that. So you click close. So once you've done that, you could use the next bar, or you can automatically allow price to move on its own. Then you click here. You watch this. You see price is moving on its own. If you want it to move very fast, you increase the speed. And it moves as fast as you want. If you do not want that, you pause, then you use the next bar, then you control it at your own pace. And if you notice, the indicator is setting up as price moves. So as you can see, this is yesterday's high. Because of the periodic separator, they've come into a new day. So look at that, what happens. You can see how price had a tough time breaking it. So if you had your 30 minutes, you can observe it from your 30 minutes and decide if you will take a trade. So instead of you waiting for your demo to practice, you could use this to build your confidence. So instead of you waiting for your demo, because you use this to build confidence. How do you get confidence from it? Experience. You already have the knowledge. Now that you have the knowledge, you need to gain experience. On this, somebody who is diligent can do 1 year's worth of data back testing under 3 months. But if you're doing your demo on your demo account, you need 1 year, one full calendar year, 365 days. But somebody who is serious can do 1 year's back testing under 3 months. Your experience level is not the same. And it is that difference in experience level that creates confidence. So I won't take so much of your time. So this is the session break. So as you keep moving, you notice it's moving. So we're now in London session. We're now in New York and London overlap. You can see. So it's very easy. Any system you want to use it to test, whether support, resistance, this order flow system, it works very well. So I think if you, some of you, if you put that weekly listing, you'll find out that it works. I don't know why this one is not working. Honestly, I do not know why. I have no idea. I don't know why it's not working. Because I have no idea. And you can use your zigzag to locate your highs and lows, the ones that are broken. The zigzag also can help. Pick your trend line, put it sideways. Pick your trend line. Make it as long as you want. If you want it very long, you put the ray. If you don't want it very long, you remove the ray. Okay. Okay. You can hold down control and you replicate the line. So if you want to find out your support and resistance using this zigzag, you can also use this. So, see what happens. So it's very simple. And so if you want to test your supply and demand, you can also use this to test your supply and demand. It works the same way. So this will give you a lot of added advantage to your experience level. So, do I have any questions before I end the class? Any questions? If you have any questions, you can type in your questions. Do I have any questions before I end the class? Hello, are you guys there? Any questions?
No question, sir.
Okay. Someone is asking about the supply and demand. Supply and demand is not for today. So any questions on what I've taught so far? So like now, if you're using TradingView and you want to plot for next week, if you're using TradingView and you want to plot for next week, let's use this GBP Swiss francs for an example now. You're going to first start with the monthly. You're going to first start with the monthly. And when you start with the monthly, what are you looking at? You know, this is a candle for August. This is last month's high. You have it as prior month's high. You have prior month's low. As you can already see, from the monthly view, there's a reluctancy to move above the previous month's high. That is telling you that this pair has the potential to still move down a bit. And you go into your weekly time frame. When you go into your weekly time frame, what will you now be looking at? You pick the previous week's high. Previous week high, and you pick previous week's low. So once you've done this, you're already set up on your weekly. Then you drop down to your daily time frame. Drop down to your daily time frame. This is Friday's candle close. You could see the way I mark it is as yesterday's low, yesterday's low, yesterday's high. So this is what you do. Then you drop down to maybe your 1 hour or 30 minutes. Then you wait and see what plays out. If price does not break this low, then you have the idea that it's going to try to move higher. But if price breaks this low, you have an idea that the next level is going to be here. So this is how you just use it very simply. I don't use any indicators, I don't use trend line. These are just only what I use. So the way I've just marked out this chart, this is what I'm going to trade next week. Because by looking at the chart from the weekly point of view, there's already a bit of a rejection. And if you go into your daily time frame, you see you have what looks like a kind of bearish engulfing candle. But you would not be so quick to jump up on the bearish engulfing candle because there is an anchor candle here. This candle has 1, 2, 3 days within its range. So the low of this candle is going to be very important. What do you think you have at the low of this candle? Hello? Are you guys there?
Liquidity.
You're going to have liquidity here. So even if it breaks this low, you have to be very careful because if it goes back inside, what's going to happen? It's going to move to the opposite direction. So when you're trading, you think like an institutional trader. So but the deal with this system of trading is that it requires a lot of inbuilt patience. A lot of people don't have it. And a lot of people are not willing to develop it. Because even if price is moving, some people are so trigger happy, they want to sell. It's moving down, let me sell. And then they sell, they get carried away with big candles. Before you know, the big candle closes with a long lower wick and moves in the opposite direction. So, I think I have helped my people for today. So this is how I just do my reviews. It's just very simple. Is there any person who, sir?
Good morning.
Good morning, sir.
I have a question.
Go ahead, sir.
You know, one of the challenges I have, are you hearing me?
I'm listening.
Is in this structure, by the time you move from 1 month to weekly to daily and 4 hours and 15 minutes, most times as the thing is getting clearer and clearer, you are now beginning to see structures upon structures upon structures, and at the point you somehow
you must have a plan. No, to avoid that, you must first have a plan of what you intend to do. If you don't have a plan, you get deceived by the structure upon structure. You get. You must have.
Hope you're understanding what I'm saying.
That's what I'm explaining to you. First, you must have an idea of what your game plan is. You can put the open and close on the daily or on the weekly. You get, as sometimes I don't always put it, sometimes I put it. Because it's the first bellwether warning. He's saying, have a look at US 30. So, Mr. Answer,
yes, sir.
You need to first have an idea of what your plan is. You get, what level are you looking at? You're not looking at the structure, you're looking at the level. Has price got to that level? When price gets to that level, the next question you ask yourself is, what am I expecting? Do you get? You're not trading the structure because the structure can be used to mislead you. Are you with me? You only drop to you can stay on a higher time frame. Once you feel price is getting to your level, you drop to a lower time frame to take your position. But stay on the higher time frame to stop you from being deceived by the level upon level. Are you getting me?
Yes, sir.
Do you get?
Yes, sir.
So that's how you avoid it. It's just that simple. That's how I avoid it. I will tell you from my own experience. You must know what you're looking for. If you don't know what you're looking for, once you drop to lower time frame, you're in trouble. If you don't know what you're looking for. So once you're on the lower time frame, the first thing you ask yourself is, what am I expecting? If you don't have your levels on the chart and you drop to a lower time frame, that's where you have a problem. And then you must identify what the candle pattern you're looking for. Now let me show you something. Something also I noticed, yes, USD I almost forgot. USD A friend in a group, this is Euro USD This is a USD Let me show you. This is last week's candle. This is last week's prior low. You see, there's a lot of experience. Yes, it's a red engulfing. Red engulfing is the anchor on the GBP. So if you look at this, now let's drop down to the 4 hour. They give a buy position, right? Yeah. Everybody started buying. Then it started coming down. Those that are buying, their stop loss is going to be there. Some people that believe this downtrend is going to continue, they are going to have their sell stops here. What did they do? They came down, they picked it. And if you look at this chart, can you see a wide W forming?
Yes, sir.
If you drop to, it's clearer when you drop to your daily time frame. Can you see it?
Yes, sir.
It's almost formed. If you switch to your line chart, it's very, very evident. Lower leg. This is the most powerful. What this lower leg means is that they've taken the liquidity and they don't have intentions of moving down. So what would they now start hunting for? Liquidity here, liquidity here, liquidity here. Just because I said it doesn't mean you go and buy on Monday. You must be wise.
Yes, sir.
So somebody said I should look at US 30. Let me look at US 30. I don't know why this person wants me to look at US 30. So let's look at US 30. Just like I said last week, you guys should watch my reviews. Don't do yourself the service looking for who will give you buy and sell. The reviews are free. Most people don't give out their reviews free. You don't see it on YouTube or you see it anywhere. Some people you pay to be in their reviews. Last week, I think last week or per week, I said this U30 is going up. That there was something I saw there. I used the chart. I can't remember where the chart is, but I used the chart. Let me see if I can plot what I saw on that chart. Let me see. I used my fib from here to here. I think it bounced up with 50%. It was somewhere here. I don't quite remember. But there was something I saw. Let me go to the weekly. It was on the, when I was on the weekly, I saw that stuff. But I said that this U30 is going to go up. I don't trade this U30. For those of you who might wonder, I don't trade it. But some people ask for reviews on it, so I always do reviews on it. So this is what I saw. I think it was last week. Yes, it was last week. I said on this red candle, I remember clearly, I said they've broken the lows. And when you understand this order flow, you can, to an extent, tell what the market is about to do. I said last week that the inability of price to stay below this weekly low points to the fact that they are going to go higher. I said it last week. It's just that this US 30 is very fast. It's very, very fast. If you don't know what you're doing, you don't know what you're doing on this pair, you might go home very, very early. This pair is not for the faint of heart and it's not for the indisciplined. So if you notice, they broke below. And if you look this daily, do you see what they are doing here? I think people trade this US 30 off the 15-minute or 1 hour. I can't remember. The person who asked for the US 30, what time frame do you trade it off? So do you see what they did here? So immediately they created this. Now, do you see the bearish the bullish order block here. We tested it, and after that, what did you do? It just took off instantly. So if I now look at this, if I look at this on the monthly time frame, I have, if you look at this now on the monthly, this candle is within this candle's body. And where is, you have a high here. This one, I will not call this monthly high, prior month's high. I'll just call it monthly high. Monthly high. Monthly low. We're taking care of this. So you're looking at the price is coming to this monthly high. That's the most, that's logically the next target it's going to go to this level. But this is a weekly candle. So what are you going to now do on this weekly candle? Very simple. It will not just come out and take us straight. It might pull back. So here you go in, you will do what you have, the prior week high and the prior week low. Prior week low. So once you've done that, then since you're using the weekly candle and you know this weekly candle is bullish, you apply your fib. Because this candle is very big. Apply your fib. You look for the weekly 50 and you set it up there. Look for the weekly 50. If you want, you can remove the fib. Once you've done that, you drop to your daily time frame. When you drop to your daily time frame, as you can see, Friday's high is the high of the week. So you leave the previous week high, then you look for the low. Call it yesterday's low. So now, this man, definitely they are telling you they are coming here. So you'll be looking for buy other blocks, bullish order blocks to go long into. You already have your weekly 50 here. This is your weekly 50. This is your weekly 50. So if the price drops and holds above here, then you are looking to take it long. But there's a possibility that price may pull back before moving higher. So for now, this US 30 is bullish. This was the warning signal here. So first target is going to be here. Then if you look at this place, there's an M formation here, the higher leg M formation. Can you see it? So their next target is going to be this area. If they break here, they are coming up to this level. If this level fails to hold, then they are moving higher. That's just it. So on this pair, you'll be looking for dips to buy. So that's it for today. Thank you all for today. Is somebody asking a question?
Yes, sir.
Who is asking?
Alpha.
Okay, what's your question, sir?
How do you apply your mean threshold?
It's fib now.
No. I'm talking about other blocks.
I don't apply it except it is very big.
Big, okay. It doesn't matter the time frame.
No.
It can be one.
No. I only apply mean threshold on 1 hour and above.
Okay, cool.
And if the other block is very big, I will really apply it. If it is not big, I just leave it the way it is. So right. Any other question before I call it a day? Any other question? So everybody understands.
Good morning. Will Wright.
Good morning, sir.
Good morning. Yeah, please, quickly. You said last time that you touch on the demand and supply. I don't know when it's likely going to be.
Well, that might be next week or per week. I don't know.
Okay, we should keep reminding yourself.
Are you not? Are you in the group?
Yes, I am.
I posted materials there on demand and supply now.
No, I didn't see of recent.
It has been there. Are you not in the alumnus group?
Yes, I am.
It's there now.
No, you just said you would touch more on it so that
Have you,
proper.
wait, the question is, have you watched the one I posted in the group
Yes, I have.
and you still have issues? That'll be next week. That'll be next week. So any other question? Any other question? So in the absence of any other question, so for those of you that are visiting, if you need information on putting you through, you can reach me on my Telegram handle or on my WhatsApp number. This video will be posted to the YouTube channel. This is the YouTube channel. Plan your trade, trade your plan. When you go there, you like the video and subscribe so that once you and click the notification button so that once I post any video, you could always go back there to watch it. So I thank you all for taking your time to attend. I wish you a blessed weekend. Don't forget to do your practice. Perfect practice makes perfect. Once you put in the time and the effort, trading will only become easier. When your trading becomes boring, you know you've arrived. But as long as when you look at your chart, you still have palpitations, that shows you've not yet arrived. So you need to back test. Take the weekend, back test, back test, back test. I always say, if you bleed in training, you will not die in warfare. Thank you all for coming. I wish you all a beautiful weekend. Thank you.